Dear students, in the previous class we have seen two cases for the treatment of goodwill. Today we will start with the third case, and the third case is when the new partner is taking admission in the partnership business and he brings his share of goodwill in cash, and that amount is withdrawn either partially or fully by the sacrificing partners. Then in such cases, how we will pass the journal entry? For that we will take one numerical question, and the numerical question is: A and B are partners sharing profit and losses in the ratio of 3:2. They admitted C for 1/4 share in profit. C brought rupees 50,000 as his capital and the requisite amount of goodwill premium in cash. The goodwill of the premium is valued at rupees 20,000. The new profit sharing ratio is 2:1:1. A and B withdraws their share of goodwill, pass necessary journal entries. Now we will solve that problem here. We will make the column for passing the journal entries. Journal entries. This is a column for particulars. This is a column for ledger folio. This is a column for debit amount. This is a column for credit amount. The very first journal entry that we will pass is when the new partner, that is C, he brings his share capital and his share of goodwill in cash. At that moment, what journal entry will be passed? The journal entry will be cash account debit to C's capital account and to premium for goodwill account. This is the journal entry that will be passed. Now we will write down the amount of capital which is brought in by the new partner, and the amount is rupees 50,000 which he is bringing by way of the capital. Now how much amount he is bringing for his share of the goodwill? Now that information is not given in the question. The information given in the question is the goodwill of the entire firm is given, and the goodwill of the entire firm is given as rupees 20,000. Now we will have to calculate C's share of goodwill. So C's share of goodwill we will calculate. The goodwill of the entire firm is given as rupees 20,000, write down here as rupees 20,000, into his share in the profit is 1/4. 4 ones are 4, 4 5s are 20. It means that C's share of goodwill is rupees 5,000. Now if he brings rupees 5,000 as his share of goodwill, it means that total of rupees 55,000 rupees is coming in the business. Now you have to write down the narration. Being C brings his share capital and the amount of premium. That's all. Now let's pass the next journal entry, and the next journal entry is for the distribution of the amount of premium which is brought in by the new partner. Now how much he has brought by way of premium? It is rupees 5,000. This amount of rupees 5,000 will be distributed between the sacrificing partners in their sacrificing ratio. So now let's pass the journal entry. The journal entry will be premium for goodwill account debit to sacrificing partners. Don't write now because we don't know whether both the partners have sacrificed or not. First calculate the sacrificing ratio and then you have to write down by name whether both the partners have sacrificed. Now A and B, their old profit sharing ratio is given as 3:2. The new profit sharing ratio of A, B and C is given as 2:1:1. Now you have to calculate the sacrificing ratio. The formula to calculate the sacrificing ratio is old share minus new share. A and B both has sacrificed. Now what is the old share of A? It is 3/5 minus the new share of A is 2/4. Take out the LCM, it is 20. 12 minus 10 is equals to 2/20. What is the old share of B? It is 2/5 minus the new share of B is 1/4. Again 20. 8 minus 5 is equals to 3/20. It means that both the partners have sacrificed A and B in the ratio of 2:3. Now we came to know that both the partners have sacrificed. So you can write down the name of both the partners to A's capital account to B's capital account. What is the amount that will be distributed between the sacrificing partners? It is rupees 5,000. Now how this amount of rupees 5,000 will be distributed between A and B? In the ratio of 2:3. So A will get 5,000 into 2/5. 5 ones are 5, 1,000 is equals to 2,000, and B will get 5,000 into 3/5, that is rupees 3,000. So write down here as rupees 2,000 in front of A's capital account and rupees 3,000 in front of B's capital account. Now you have to write down the narration, being the amount of premium distributed between A and B, in their sacrificing ratio, because A and B are the sacrificing partner. The last information given in the question is A and B, both of them are withdrawing their share of the goodwill. When A and B, they are withdrawing their share of the goodwill, at that moment the general entry will be A's capital account debit, B's capital account debit to cash account. Why cash account is credited? It is just because cash is going out of the business, and you know very well that whenever cash goes out of the business, that has to be credited. Now what is the amount that is going out of the business? It is rupees 5,000. How much A is withdrawing? A is withdrawing to an extent of rupees 2,000 and B is withdrawing rupees 3,000. Now you have to write down the narration, being A and B withdraws their share. So these are all the three general entries that you have to pass for this question. Now let's pass on to the next case. What is the next case? The next case is when the new partner brings only a part of premium for goodwill in cash. What general entry at that moment will be passed? Now for that purpose, we will take a question. Aditya and Balan are partners sharing profit and losses in the ratio of 3:2. They admitted Christopher for 1/4 share in profit. The new profit sharing ratio agreed was 2:1:1. Christopher brought rupees 50,000 as his capital. His share of goodwill was agreed at rupees 15,000. Christopher could bring only rupees 10,000 out of his share of goodwill. Record necessary journal entries in the book of the firm. This is the column for the amount, debit balance. This is the column for the amount of the credit balance. Now, the very first journal entry that we will pass is for when the Christopher, the new partner, he brings his capital and his share of goodwill in cash. At that moment, the journal entry will be cash account debit. Dear students, you know why cash account is debited. Cash account is debited as because cash is coming in the business. So, cash account has to be debited and Christopher's capital account will be credited to Christopher's capital account to premium for goodwill account. Cash account debit to Christopher's capital account to premium for goodwill account. What is the amount of Christopher's capital which he is bringing in the business? It is rupees 50,000. So, write down here as rupees 50,000, and the premium for the goodwill which he was able to bring in the business was rupees 10,000. So, record here as rupees 10,000. The total amount that is coming in the business is rupees 60,000. So, we have recorded rupees 60,000 which is coming in the business. Now, after writing this journal entry, you have to write down the narration. Here I am not going to write down the narration as because in the previous 3 cases I have recorded here. What narration will be recorded here? Being the amount of capital and the premium for goodwill is brought in by the new partner Christopher. That's all. Now, the amount of premium which is brought in by the Christopher will be distributed between the sacrificing partners. So, for that purpose you have to write down the journal entry, and the journal entry will be premium for goodwill account debit. Here he is bringing rupees 10,000. So, record here as rupees 10,000. But Christopher's share of goodwill was rupees 15,000. But out of this he was able to bring only rupees 10,000 which we have recorded here, and the balance of rupees 5,000 he was unable to bring in the cash. Then in such case what you have to do is you have to take that amount from Christopher's capital account, and that will also be distributed among the sacrificing partners. So, for that purpose what you will have to do is you will have to debit the Christopher's capital account. So, here Christopher's capital account will be debited with rupees 5,000, and this amount will be distributed between the sacrificing partner. I don't know whether both the partners have sacrificed or not. So, don't write the name here now. First you have to calculate the sacrificing ratio. And balance, old share was 3:2, and the new profit sharing ratio of Aditya, Balan and Christopher was 2:1:1. Now we have to calculate the sacrificing ratio. The formula to calculate the sacrificing ratio is old share minus new share. Now first we will calculate the sacrificing ratio of Aditya, and next we will calculate of Balan. So Aditya old share was 3/5 minus his new share is 2/4. So it is 20. 12 minus 10 is equals to 2/20. Now we will talk of Balan. Balan's share in the profit, old share in the profit was 2/5 minus new was 1/4. So 8 minus 5 is equals to 3 by 20. So, the sacrificing ratio of Aditya and Balan is 2:3. It means that both the partners has sacrificed. So, both the partners will get the share of goodwill which is brought in by the new partner, that is Christopher. So, the amount of rupees 15,000 will be distributed between Aditya and Balan in the ratio of 2:3. Aditya will get out of this 15,000 to 2 by 5, 5 ones are 5, 5 threes are 15 is equals to 6,000 rupees, and Balan will get rupees into 3 by 5, he will get rupees 9,000. So, here you have to write down as 2 Aditya's capital account, 2 Balan's capital account. Aditya will get to an extent of rupees 6,000 and Balan will get rupees 9,000. Now, you have to write down the narration as being the amount of premium distributed between Aditya and Balan in their sacrificing ratio of 2:3. So, this is the solution of this question. Now, students, we will see how to calculate the hidden goodwill. Hidden goodwill is the case 5. The question is, Madhu and Neha are partners in a firm sharing profit and losses in the ratio of 3:5. Their fixed capital were rupees 4 lakh and rupees 6 lakh. Tina was admitted as a new partner for 1/4 share in profit. Tina acquired her share in profit from Neha. Tina brought rupees 4 lakh as her share capital, which was kept fixed like other partners. Calculate goodwill of the firm on Tina's admission. Pass necessary journal entries for the treatment of goodwill on Tina's admission, considering that Tina did not bring her share of goodwill in cash. Now, this is the question of the hidden goodwill, as because here the information relating to the goodwill is not at all given. You have to calculate the goodwill of the entire firm first, and then you will have to calculate the new partner's share of goodwill. Now, for that purpose, first of all, you will have to pass the general entries. We will make the column for writing the journal entries. This is the column for particulars, this is the column for ledger folio, this is the column for amount, debit amount, and this is the column for the credit amount. Now, see, Tina took the admission in the partnership business and she brought her share capital in the business. For this purpose, we will pass the general entry as cash account, debit to Tina's capital account. What is the amount that is coming in the business? It is rupees 4 lakh. So, here you have to write down rupees 4 lakh. After this, just below to this entry, you have to write down the narration, and the narration will be being rupees 4 lakh brought in by Tina as her share capital. Now, after passing this general entry, let's pass on to write the entry for the share of goodwill. Now, here in this case, no information relating to the share of goodwill is given. This is the case of hidden goodwill. Now, we will have to first calculate the goodwill of the entire firm. How we will calculate the goodwill? Here we will see. First, for that purpose, what you have to do is, you will have to calculate the goodwill of the new firm on the basis of the new partner's capital. So, write down here as new firm's capital on the basis of new partners capital. Now, what is the amount of capital that is brought in by Tina? It was rupees 4 lakh. And what was her share in the profit? Her share in the profit was 1/4. Reciprocal that share in the profit. The amount after calculating, we will get rupees 16 lakh rupees minus combined capital of all the 3 partners. First partner capital was rupees 4 lakh, the second partner's capital was rupees 6 lakh, and the third partner's capital was rupees 4 lakh. If you add all these 3 figures, you will get rupees 14 lakh. Subtract this figure, the balance is rupees 2 lakh. So, this 2 lakh rupees is the amount of hidden goodwill, or you can say that this is the amount of goodwill. This goodwill is the goodwill of the entire firm. What you have to do is, here you have to first calculate the Tina's share of goodwill. So, Tina's share of goodwill is equals to 2 lakh into 1/4. So, it is rupees 50,000. Write down here as rupees 50,000. So, Tina's share of goodwill is rupees 50,000, but she was unable to bring this rupees 50,000 in cash in the business. So, for that purpose, what we will do is we will open a current account, as because here in this question it is very clearly said that the partners are having the fixed capital account, and if the firm has adopted the policy of having the fixed capital account, then in such case we can't take the amount from their capital account. Instead, we will open the current account. So, for that purpose, the general entry will be Tina's current account debit to Neha's current account. Why? Only the amount of goodwill is transferred to the Neha's current account. It is just because Neha, she has given her share in profit in favor of Tina. So, the amount is rupees 50,000. Now, you have to write down now the narration, and the narration will be being Tina's current account opened and the amount is transferred to Neha's current account. So, these are the 2 general entries that will be passed for this question. Now, let us pass on to the next topic, that is the revaluation account. Now, we will see the next topic, and the next topic is the revaluation account. The question here arises is, what is the nature of a revaluation account, and whether revaluation account is required at the time of the admission of a partner or not. The answer to these 2 questions are, revaluation account is a nominal account in nature, and at the time of the admission of a partner, the revaluation of assets and reassessment of liabilities is a must. The answer for the second question, whether revaluation is required at the time of admission, yes, revaluation is required so that the profit on such revaluation up to the date of admission may be ascertained and adjusted in the partner's capital account in their old profit sharing ratio as it belongs to the old partners. Now we will see the format of the revaluation account, that how the revaluation account is prepared. This is the format of the revaluation account. This is the debit side, this is the credit side, this is the column for particulars, this is the column for amount which is in rupees, this is the column for particulars, and this is the column for amount which is in rupees. Now, how you will record in the revaluation account, that we are going to see first. Whenever the value of assets increases, that has to be recorded on the credit side. I will write down here assets. If the value of the assets increased, if the value of the assets increases, that has to be recorded on the credit side, and whenever the value of the assets decreases, that has to be recorded on the debit side. This is the thing that I will write here, decreased value. Now, similarly, if we talk about the liabilities, whenever the value of the liability increases, that has to be recorded on the debit side, and whenever the value of liability decreases, that has to be recorded on the credit side. So, first we will write here liabilities if the value increases. Value increases. For the liabilities, if the value decreases. Now, apart from these things, two things more is there, and they are if there is any unrecorded assets. What is this unrecorded assets? Unrecorded assets are those assets which are not shown in the old balance sheet. If it is not shown in the old balance sheet, then now you will have to take it into account, and now you will have to record it in the revaluation account. Now, where you have to record such unrecorded assets? It has to be recorded on the credit side. So, you have to record here unrecorded recorded assets. And if there is any unrecorded liabilities, that unrecorded liabilities has to be shown on the debit side. Unrecorded liabilities. So, we have talked about these things. I will repeat it once again. Whenever the value of assets increases, that has to be recorded on the credit side. By name you have to write. If suppose the value of land and building has increased, then you have to write down here as by land and building account, and the amount with which it has increased, that has to be recorded here. Similarly, whenever the value of the assets decreases, that has to be recorded on the debit side. By name you have to record. Now, whenever the value of the liability increases, that has to be recorded on the debit side, and whenever the value of liability decreases, that has to be recorded on the credit side. Now, let us talk about the unrecorded assets and unrecorded liabilities. If there is any unrecorded assets that is found, that has to be recorded on the credit side of the revaluation account, and if there is any unrecorded liabilities that is found, then it has to be recorded on the debit side of the revaluation account. Now, we will have to close the account. When you close the account, you have to total both the side and see which side is bigger. If suppose the amount of the credit side is bigger than that of the debit side, then it means that it is a credit balance, and if it is a credit balance, then we call it as the gain on revaluation, and if there is a gain on the revaluation, that has to be transferred to the old partners capital account in their old profit sharing ratio. Similarly, you may come across the situation when there is a more debit balance. It means that when the total of the debit side is more than that of the credit side, then we may say that it is a debit balance, and if it is a debit balance, then it means that there is a loss on revaluation, and such loss on the revaluation will have to be borne by the old partners in their old profit sharing ratio. So this is the thing that we have seen how we can record it in the revaluation account. Now let's pass the journal entry, that how the journal entries will be passed. The journal entries will be whenever, as I told you, that whenever the value of assets increases. For that, what journal entry will be passed? We will see here itself. Whenever the value of assets increases, at that moment the journal entry will be assets account debit to revaluation account. This is the journal entry. Now you have to write, I have recorded here assets account. You have to write by name. If suppose the value of land and building has increased, then you have to write here as land and building account debit to revaluation account. If suppose the value of stock has increased, then at that moment you have to write here as stock account debit to revaluation account. Now suppose the value of assets has decreased, then in such case the reverse journal entry will take place. What will be the journal entry? The journal entry will be revaluation account debit to assets account. I have written here as assets. You have to write by name. If suppose the value of plant and machinery has decreased, then here you have to write as to plant and machinery account. So the journal entry will be revaluation account debit to plant and machinery account. That's all. Whenever the value of liabilities increases, at that moment what journal entry will be passed? At that moment we will write down here the journal entry as revaluation account debit to liabilities account. Here I have recorded as liabilities. You have to write by name. So here the journal entry will be revaluation account debit to liabilities account. This journal entry will be passed when the value of liability increases, and whenever the value of liability decreases, at that moment the journal entry will be liabilities account debit to revaluation account. This will be the journal entry that you have to pass. Now let's talk about any unrecorded assets. If there is any unrecorded assets, then what journal entry will be passed? The journal entry will be unrecorded assets account debit to revaluation account. By name you have to write here which is the unrecorded assets. Now let's talk about the unrecorded liabilities. If there is any unrecorded liabilities, then you have to record as revaluation account debit to unrecorded liabilities account. So this is the way in which we will pass the journal entry. And the last journal entry, which I told you that it may be the gain on the revaluation, at that moment the journal entry will be a revaluation account debit to old partners capital account. The journal entry will be revaluation account debit to A's capital account to B's capital account. This will be the journal entry. If suppose the business suffers a loss on the revaluation, the reverse of this journal entry will be passed. So what will be the journal entry? A's capital account debit, B's capital account debit to revaluation account if the A and B were the old partners. So now we have seen about the revaluation account, that how the revaluation account will be prepared. This is the format of the revaluation account, and I have passed here the general entries on the revaluation of assets and reassessment of liability. So dear students, that's all for today. In the next class, we will see how to prepare the partner's capital account, and we will see a numerical question in the next class. Thank you.